Okay, let's go.
Today, we are going to talk about something that might sound completely backwards: trading psychology. And we're going to unpack a pretty shocking truth that in the world of trading, winning, really winning big, can actually be the thing that leads to your biggest, most catastrophic failure. Yeah, seriously. So let's get into it. So let me ask you a question. What do you think is the number one reason that most traders just fail? Why do they lose all their money and have to walk away? Just take a second. What do you think it is? You'd probably guess it's about picking the wrong stocks, right? Or maybe having a flawed strategy. Well, the surprising answer is nope, it's not that. While those things obviously matter, the single biggest killer of a trading account isn't what you trade, it's how much you bet. It all comes down to position sizing. To really get why this is so important, let's just run a little experiment. We're going to play a trading game. And this game has a system that is so good it seems literally impossible to lose. The rules are super simple. First, you just predict a coin flip, heads or tails. Second, you decide how much you want to bet on it. And third, if you're right, you win double your money. If you're wrong, you just lose the money you put up. Easy enough, right? So let's say you start out with 100 coins. This is your entire trading account, your whole stake. Every single decision you make from this point on is either going to grow this pile or shrink it. Now, here's what makes this game so powerful. You've got a system that's right 50% of the time, a coin flip, but your wins are twice as big as your losses. This is what pros call a positive expectancy system. And trust me, as Dr. David Paul, the source for this explainer, says a professional trader would literally sell their granny for an edge like this. So how on earth could you possibly go broke? And this is where we get to the core of the whole thing. With a system this good, failures shouldn't even be on the table. And yet, almost everyone who plays this game will eventually go completely bankrupt. The reason is a simple but absolutely deadly mathematical trap. So let's start with some really basic math. In a 50-50 game, like our coin flip, what are the odds of losing twice in a row? The answer, of course, is 1 in 4. Now, this isn't just a theory, it's a statistical certainty. Losses, just like wins, tend to show up in clusters. And it's this clustering effect that makes the whole game so dangerous, because it's something our brains just love to ignore. Okay, look at this table. This is where it all clicks into place. If you bet half your money, 50% of your capital, on each flip, you only need 2 losses in a row to go completely bankrupt. And that event is gonna happen, on average, every 4 trades. You are pretty much guaranteed to fail. Bet a third of your capital, and you go bust after just 3 losses? You see the point here? It doesn't matter how good your system is if a completely predictable losing streak can wipe you off the map. But this isn't just a math problem. If the math is so simple, why do so many smart people fall right into this trap? Well, it turns out the real enemy isn't the spreadsheet. It's the chemistry inside your own brain. The real problem is the feeling you get when you win. You see, after just 1 or 2 wins, your brain gets to work. Your pituitary gland starts flooding your system with hormones that actually change your emotional state. You're not thinking logically anymore, you're thinking through a chemical haze. And this state has a name: euphoria. It's that high, that feeling of being on top of the world, like you're completely unstoppable. You know the feeling. In trading, it convinces you that you simply cannot lose. Dr. Paul puts it perfectly. He says the very definition of euphoria is feeling invincible. And when you feel invincible, what do? You start breaking the rules. And this is the central, absolutely mind-bending takeaway from all of this. A winning streak is often way more dangerous than a losing streak. Why? Because after a few wins, that euphoria kicks in. You start thinking, forget the rules, I've got this, let's make some real money. And you bet the farm. You crank up your bet size, and you expose yourself to that mathematical certainty of ruin we just talked about. Okay, so how do you protect yourself from your own success? How do you survive not just the losses, but the wins, too? Well, it all comes down to a simple, unbreakable framework built on 3 key pillars. Now, before we get to the full framework, let's just focus on the single most important piece of the puzzle: this number. The source material is crystal clear on this. You should never risk more than 1 to 2% of your total capital on any single trade. That's it. This rule alone is the key to your survival. Now, for the whole shebang, first you have to find an edge. some simple, repeatable pattern that gives you a slight advantage. Second, you have to master money management, and that starts with that non-negotiable 1 to 2% rule. And third, you have to build unbreakable discipline to follow your plan over and over and over again, no matter how you feel. Now, a lot of people think discipline is just something you're born with or you're not, but that's a total myth. Discipline is a skill. It's not a personality trait. It is a habit that you build piece by piece, just like going to the gym. So how do you actually build it? Well, you start with a simple written down plan. Then comes the hard part. You have to execute that plan perfectly for about 20 or 30 trades, no exceptions. At first, it's going to feel like it takes a ton of willpower. But after you do it enough times, you literally build a new neural pathway in your brain. The process becomes automatic. You don't need discipline anymore because it's just what you do. And that leaves us with this final powerful thought. The gap between where you are now and where you want to be as a trader, it's not some massive canyon. It's not about being a genius. It's not about luck. It's about execution. By building that habit of discipline, you are just a handful of perfectly executed trades away from changing everything. The only real question is, are you going to do the work?